Our property market started the year in a tug of war, caught between falling interest rates on the one hand and market uncertainty on the other. Now that we're almost a quarter of the way through the year, it's worth reviewing what's really going on in the property markets and what's ahead for the rest of this year. Hi, I'm Michael Yardney, and I want to just spend a bit of time explaining to you what's ahead, because while there is uncertainty, there's probably going to be some opportunity. You see, CommSec economist Craig James is calling Australia the boom and gloom economy. On the one hand, our economy is still growing, and like many others, especially in Europe, and it's underpinned by a mining boom. On the other hand, consumers and businesses are a bit gloomy. It's much the same with property. In some areas, properties are faring well, but many aren't. So what gives? Before I explain that, I'd like to remind you that if you want to become a successful investor, you need a success library. We've got some great books in the Property Update bookshop that you can buy some of my books online. I'd suggest you get started with How to Grow a Multi-Million-Dollar Property Portfolio in your spare time. That book is now in its 4th edition and has helped many people grow very substantial portfolios. And if you really want to build a business out of property investment, why not get what every property investor needs to know about finance, tax and the law? In fact, I've got the books behind me here and you can see some of them, but click on the link on the side of this page here, on the right side of the page, and go to our bookshop, and why don't you build your own success library? The world economy is slowly working through its problems. The concerns of a meltdown in Europe, one that could bring the financial system to a halt, to its knees, has been averted. And the US economy is improving, albeit slowly. However, its property markets are still in a slump. Back home, we started the year with political uncertainty. It hasn't really disappeared, has it? The worry of the mining carbon tax, as well as the effectiveness of a minority government, still remain. Add to that the fact that the bank's now raising interest rates out of line with the Reserve Bank, plus the threats of increasing unemployment, and many Australians are putting off making major purchasing decisions. Things like buying a new house or an investment property. So what's really happening in our property markets? The fact is the number of properties on the market is high. Properties are remaining on the market for sale longer, and many buyers, they're still nervous about making a decision. Of course, there's not one property market in Australia, is there? What I call investment grade properties, in those middle price ranges of $450,000 to $850,000, in prime locations and with an element of scarcity, they're still selling well, even though there's clearly less interest from both owner-occupiers and investors. Having said that, B and C class properties, they're not selling well at all. Some have dropped in value by up to 10%, and some can't even be given away. Well, look, that's really not as bad as that, but you'd have to give a very steep discount for somebody to buy them. When you look at the whole of the Australian property market, sales are at a 16-year low, with RP data reporting that only 375,000 properties sold last year. In more normal circumstances, sales were over 600,000 properties a year. The problem is that while turnover is down, the number of properties listed is climbing, with currently around 310,000 properties for sale around Australia. This is up 23% on last year, and up more than 50% above the pre-global financial crisis levels. So what does this mean for the future? I guess it means the market has about 10 months supply of houses for sale, up from a more normal 4 months or so of stock. In other words, unless we see a substantial improvement in market sentiment or in the economy, we're not likely to see much of a change in house prices over the next 6 months. What these figures don't show is how fragmented our property markets really are. Look, as I've said, there's not just one property market. There are many different locations in different geographic locations and different price points. There's no doubt that the value of homes are still falling in some areas and they're rising in others. Overall, our property markets are flat. Look, it's a bit like me putting my one hand in a bucket of ice water and my other hand into a bucket of hot water and saying, look, on average I feel okay. On average the temperature's fine. Currently there are some markets that are strong, with more buyers wanting the short supply of available good properties, and there are other markets that are ice cold, with few buyers available for the large number of properties for sale. The top end has been the worst hit. The most expensive 20% of properties in Australia have registered a fall of about 6.5%. And if you drill down further to the top 10% of properties, you'd probably find they've fallen even further. But there is good news. There are some green shoots. Before this makes you all feel too gloomy, let's look at what's happening on the good side. Firstly, vacancy rates in our capital cities are low, and that means rents are going up. Number two, more properties are selling. Sure, it's still a buyer's market, but the vendors are becoming more realistic and they're meeting the market. Number three, consumer confidence is slowly increasing. It's fallen a little bit just more recently with the interest rate worries, but it's much better than it was a year or so ago. Finance pre-approvals are rising, and this always happens when new buyers start getting themselves ready to enter the market. The cycle is moving on as it always does. We're now at the stabilisation phase of the property cycle. So what is a property investor to do? I know some are sitting on the sidelines waiting for somebody to ring the proverbial bell claiming we've reached the bottom. But at the same time, others are taking advantage of the opportunities that this uncertainty is dishing up and getting set for the next stage of the property cycle. They're buying the right type of properties. One with an element of scarcity in an area that's always exhibited above average capital growth, and one to which you can add value through renovations or development. In other words, they're manufacturing their own capital growth. Yes, we're moving on to the next stage of the cycle, and that's the stabilisation phase of the cycle. You see, the markets don't move directly from the downturn to the upturn. There's a period when buyers return and take up some of the slack before property prices start rising. And I expect more buyers to return to the market later this year when they realise prices aren't going to fall much further. By the way, I've always found the stabilisation phase a great time for investors to get set before the upturn. This may be a good time to buy property. I've always found it's a good time when everybody else tells you property's a bad investment. To me, now's a good time to get set for the future. As our year progresses, I'll be giving you my thoughts on how to firstly protect your assets and then grow your wealth. You can get that not just from this fortnightly newsletter, but also from my daily blog. Now that's a different subscription to the newsletter, and you can subscribe to that by clicking the website link. You're obviously going to be getting my regular newsletter if you've got this today, so hopefully you're subscribed to that. I've got 2 more seminars to do in my national property updates in Perth and in Adelaide. So if you click the link on the below this below this video, you're actually going to be able to find out more about those. And for a small group of investors, I'm actually working closely one-on-one with about 100 investors in my mentorship program, where I help them learn the science of becoming wealthy. Now the next intake has just opened. Find out all about this program that's helped hundreds of investors move to the next level by clicking on the link below. And for a small group of you, I'm going to catch up with you at Wealth Retreat 2012. This is the ultimate educational and networking event for property investors, entrepreneurs and business people. If you're a Series Level 3 investor, or if you're already a Level 4 investor, or if you want to become one, why don't you put aside the last weekend of May in your diary and join a small group of investors who've already escaped the rat race by building their own property investment business. We've got some details about Wealth Retreat under this article. Of course, I'll keep you up to date with how to take advantage of the changes happening in our property markets in future updates. Have a great week. Make it a great week. This is Michael Yardney.